go into cash cycle, this is another issue that Interrelate wrestled with. And I define cash cycle as a time that's elapsed between when you start experiencing costs of serving a customer and when you eventually collect from that customer. And the shorter that time is, the more you match up inflows and outflows, the more efficient your cash cycle. And the more you can grow your company without the need for external financing like Interrelate required. Let's look at Interrelate's cash cycle. It was a very inefficient cash cycle. They had to spend almost a full year with a 6 or 7 person team of strategy consultants and analytic consultants, et cetera, to build the solution, a highly customized solution for a customer. For an entire year, they were burning up cash before they got the solution live. Now, once the solution went live, then they started charging the monthly fee for 3 years. Now, this consumed an enormous amount of cash for one project, but they were selling a new Global 2000 customer every couple of weeks. So imagine the amount of cash they were burning up in this process. Now, they're not the only ones with an inefficient cash cycle. Think of a spec home builder or an automaker that has to pour in a lot of labor and a lot of inputs into their product months or even a year ahead of selling it. They have the same problem. And it's no secret that in almost every single downturn, major spec home builders and automakers go bankrupt because as those cash cycles lengthen, they can't make their debt payments. Now let's take a look at D.R. Horton. This is one of the largest publicly held spec home builders in the U.S. Now this is real data as of June of this year. So look what happened in the previous 12 months. Yes, they made net income of several $100 million, but they consumed cash. They generate no cash. And notice the staggering debt levels. By contrast, let's look at an e-commerce business model. In this case, Amazon.com. Real data, same time period, half of the net income of D.R. Horton, but look at the cash they generate. They have a very efficient cash cycle, and note that there's no debt. So what is it about an e-commerce, or specifically Amazon's cash cycle, that makes it so efficient? Well, the first thing they do when you order a book from Amazon is they clip your credit card and they get the money. Then and only then do they experience the costs associated with fulfilling that order. And in many cases, they've negotiated not to pay UPS, et cetera, for 45 days. That's a very efficient cash cycle. As they grew, they just continued to accumulate more and more cash. Okay, so let's look at improving our cash cycle as entrepreneurs. The main thing is to match up those inflows and outflows as much as possible. We can do this in a couple of ways. One is to change your business model, if at all possible. Let's go back to a spec home builder. We've talked about the issues that they face. Now let's think about a custom home builder. A custom home builder, first of all, never moves a muscle until they sell the home. Then they almost always demand some kind of down payment up front, typically 25%, and typically monthly progress payments as the home is being built. Same capability, same industry, completely different business models, completely different cash cycle implications. A custom home builder being far superior to a spec home builder. All right, if you can't change your business model, at least try to get as much upfront customer deposit as you can to help fund your working capital requirements. And number 3, try to move up your billing cycle if you're a services company. Let's say you have a pool service cleaning company. You should, and let's say you're servicing pools for the month of June. Bill the customer for the month of June on the 1st of June so they pay you during the month of June. Don't wait till the end of June to bill them because then you won't get their cash until into July. You can't grow that kind of business model effectively. Okay, and failing everything else, try your best to negotiate extended vendor payments like Amazon.com does. Now, don't do what Interrelate did and just, slow pay. Do it fairly, but negotiate extended payments, again, with the mind to match up inflows and outflows. Okay.